Hello and welcome to the channel. My name is Patrick and today we're going to look at the Marginal Value Theorem and how I've been used that to change my strategy about Bitcoin trading. And this is based on a question I got from someone because I have been in many bull runs always in 2011, so in all of them, all the bulls and the bears since the start of Bitcoin basically. And I used to trade the cycles going in low and then selling when we were high. The 4-year cycle, I mean here. But for this recent bull run from 24 and 25 and 26, I was also trading much more frequent. Not only the cycle, but also loads of other sideways movement during the cycle. And I did talk about this 2.5 years ago on a previous channel why I was going to change my strategy. Now when we have the outcome, I'm going to do a recap. I also reveal how I used this margin value theory to come to this conclusion already 2.5 years ago. First though, a disclaimer, there are no financial advice or any sort of other advice in this video, just me sharing my own thoughts and ideas that potentially can serve as educational material. Perhaps a second disclaimer, I am a geek and can almost not make a decision without building a mathematical model. In the old times when I bought used cars, I had to build a model that predicted the price of the car based on the model and the equipment and the mileage and the year. So I could see if the dealer were giving me a fair price or not. The same when buying apartments and houses. Those have served me quite well. One time I even sold my model for estimating price on apartments to the broker that were supposed to know these things. Now let's go into Bitcoin. So what I used to do was to try to buy somewhere here when we're low and then to trade somewhere here when we're high. This is the cycle from 2017, over the top in December 2017, the daily chart. And if you bought here at 500 or so and it went up to 20k, well, that's a 20x. Now, the marginal value theorem came from a mathematician in the 70s, and it has to do about when animals change habitat. If you, for example, have a bird living in a bush where there are berries, it turned out when we studied them that they do not eat until all the berries are wiped out before they leave and try to find a new place with a tree with berries where they can hang out for a while. And it turned out also that there's some reasoning for that, because when there's fewer and fewer berries left, they have to this longer distance from them. And also if they run out, they're in a very urgent situation to find a new place. If they go and look around before they run out, they have a backup. And when they find a new one, they don't have to move much, to just sit there and eat. It applies for other animals, also predators that are short on food, so on and so forth. They do change their habitat before they run out, but how do they find this limit that gives them the best chance of survival? Now, in Bitcoin's case, it was the cycle. The cycle gets thinner and thinner with diminishing returns. And the draw correction up here were very short. They happened in a few days and then we're on the way up. So you just hold there and 1 day, 2, you were down, but 3 days later you were up again. It was not that you sat and hold 7 months in the bull run going downwards. That didn't exist back then. However, when the recent cycle started, this behavior changed. So I was thinking we have less and less return from only holding here, and we go more and more sideways. What if I trade the sideways movement? Could that generate more, or at least a decent amount, compared to only trading the cycle? Then my friend were, but there is much more risk in that. Many people screw it up totally. Trading the cycle is easier. Well, I will answer that question. So you can see here, just here, we had a 7-month time we went sideways. And from the bottom to the high here, there is a 40% difference. So when we were buying the lows and selling the highs, it was 40% every time. And here we have one bull run that is more like 60-70%. We have another one here, which if you measure from the bottom is, but many wait for confirmation, so they were in best case buying here. Maybe we have one more here. So we have in 3 years' time just 3 of these explosive moves, which the entire cycle consisted of before. It just went up and to 20x. Here there's no 20x for the entire cycle. So by trading also the sideways movement, turned out that those movements gave more than just holding the entire cycle like this. I didn't know they would give more, but I thought they would give perhaps equal. I knew that we were shifting. And I will not go through all the analysis talked about on the channel when we were in this area, But basically it was based on this theorem, the marginal theorem. Just as when an animal have diminishing returns for eating, so to say, they need to move more and more because there's less berries or food around them. They change habitat, I cannot change strategy because there's less and less gains, and also they take the years to get. So that was my idea behind it. But then the second question is, isn't this much more risky? So you might just lose it all instead. The cycle trading is so easy. Well, perhaps it was for a cycle or two, but if you look at what happens in this cycle, everything went fine from the bottom up to here when we started to reach closer and closer to 50k the first time in this area here. Because here there were a Fibonacci retracement level. There was also a line in the logarithmic chart that between cycle rallies never went over that line, and that also happened to hit straight here on the 50k line in this case. Also RSI were oversold, and perhaps there are more reasons, but here people sold and started to take short, and that is when I realized this cycle will be very different, because now the Bitcoiners that have been in a cycle or two, that know how the cycle works, they use the rules what they learned in other cycles, and they get screwed over because this cycle is not behaving the same. And you see that down here how liquidation started to come. In 2017, there was just liquidation at the top here. Before that, there was literally nothing compared to what happened here. Compare that now with this current cycle. Already here at 50k, long before the halving, liquidation starts to spike. Then after that, we had the next rule that we cannot break all-time high before the halving. So once again, people started to take shorts and or sell. And once again, we got full of liquidation, which you can see down here in this entire area. So these two rules from previous cycle screwed many people up that were just doing cycle trading. Then when this happened and we got an all-time high here, we started to go sideways for 7 months. Already after 2-3 months, this has never happened before. We had corrections for days or weeks, not for months. Then the idea about a left translated cycle came up, that maybe the top is earlier this time. And unless we do like an ABC Elliott correction and up, well, the top is already in. And that scared also people out, in particular in this area here when we had this big crash, which you can also see on the liquidation level. There was a bunch of moving averages that have called the top in previous cycles. And they also started to cross. Some crossed already here and some crossed here. So basically we started to have people giving up because of the time it took to go sideways here. And that we also were lower and lower. And when the halving happened, we have already made an all-time high and then we were going downwards. So everything was weird, not how it used to be. Some people had already early on positioned themselves in Ethereum because that's Ethereum should follow Bitcoin, but just do more. And some other were even more happy. They went to the altcoins because they will do even more than Ethereum. And this had it gradually because some intended to be in the Bitcoin cycle but gave up and moved to Ethereum here, and some gave up and moved to altcoins later on, and some were already in Ethereum altcoin from the start because that was their plan. And you know, we didn't have an exponential Ethereum cycle. We did not have an exponential altcoin cycle. They went sideways and many did not even do an all-time high. Then when we eventually broke out here, people had given up and taken short instead, because every time we were about to break up, people took long and got wrecked. So then they switched to take short, and you can see once again loads of liquidation happening when this rally finally happens. And then everything, okay, now we're back on track. Now it was still a discussion, and will it be a left translated cycle, or where will the top be? But now we're back in business. This was just something odd. But then we started this kind of slow pullback also, which relatively speaking very slow. You saw on the other chart how it was like this and up, and here we have once again weeks and months going sideways. And once again loads of liquidation happening. But then finally, we did know one thing, that October, November will be the most green months ever. They've always been that the year of the top. So even though everything was screwed up, we still had the last quarter. That will save us. That will be something we have never seen before. And this is 3rd of October. And here liquidation started again because October and November did not become the greenest and highest bar ever in history as they always had been. They become red bars instead. The entire year become red, even the entire year historically had been green. And the other bunch of indicators that did not call another top incorrectly, like the pi indicator and others, were still intact here. They have still not called the top. And I think that is why this drop here had the last of them scared out. The huge liquidation once again. So my point here is that we have lost loads of Bitcoin also by trading the cycle. one single day, I don't remember if it was this liquidation or which one it was, we lost 1.6 million accounts got blown up in one single day. All in all, somewhere between 7 to 10 million bitcoins have changed hands from retail to institutional players or private, very wealthy people. And we know that because of blockchain analysis. We know that the buyers were buying larger amounts to be retail players, and we know the sellers were how long they hold them and what size they were selling. And that has never happened in a Bitcoin cycle before either. And not too many of these for newbies, because we did not have so many newbies this time around. And we also didn't get a blow off top, which also, of course, helped to fool people. So my point here is that, yeah, I'm not saying the trading I've done has been easy, but for a few of you might have followed me since 2.5 years back, so you have seen all the trade posted and been doing really well. But for me, it was not a risk-free option to just trade the cycle and a high-risk option to try to trade also the sideways movement, all the dips basically. As soon as a dip, Patrick is buying. Of course, there's certain criteria for the dip, so not just buying randomly. But that we cannot cover today. You have to subscribe if you want to see about that. And one reason I tell this is to also evaluate what we thought would happen 2.5 years ago and what did actually happen. And also because I think this pattern of Bitcoin is still intact. So it will keep surprising people. We have some sort of 4-year cycle-ish movement still going on because we don't know when the bottom will be. If everything would repeat, we'll have a bottom in October down at 32K. I don't believe that, but if everything would repeat according to 4-year cycle. But as you can see, out of 10 things I listed here, 9 of them did not repeat. But we still have one that we don't know the outcome of yet. But after that, or before that, when we start to rally again, I think we need to be prepared for that this is the situation. So hopefully that explained why I changed my trading strategy 2.5 years ago, based on math from the 70s when someone studied birds and animals, the Marginal Value Theorem. Thank you for watching, subscribe all those things, and hope to see you all soon again.